Gosh, you remember back in 2012 when AI was just like a baby learning to walk? In finance back then, quant trading was like the creme de la creme. It was the hottest thing on Wall Street. All the quants were trying to put heuristic models together. They could trade super fast and beat everyone else. And those algorithms were based on market theories, and they worked well for some, but for others, they lost a ton of money in a blink of an eye. And now fast forward to today. Artificial intelligence is sprinting faster and faster day by day, especially in the finance market, but these new AI systems are trying to be smarter than their competitors. Current finance AI is all about thinking, it's about interpreting, it's about synthesizing, it's about language, surprisingly. Now, pioneering AI professor Andrew Ng says, if a human can do something, eventually AI will too. That means one day artificial intelligence will certainly be driving your car. It will be helping you eat healthier. It will be recognizing your grumpy face in the morning and knowing that you need coffee before you even ask. But when it comes to predicting the stock market, predicting the roller coaster of up and downs that all stocks that are publicly traded go through, I still wonder if it's going to solve that problem anytime soon. So I'm going to argue in this video that AI finance is way overhyped right now. But if you look past this overhype, there are some seeds that are being planted in the artificial intelligence community that may well blossom into something the financial sector has never experienced before. Now, the primary reason why I think AI in the finance space is overhyped is because there's not a lot of good humans with information that AI can even learn from in the first place. You've probably seen some of those famous studies where monkeys throwing darts do about as well as an average financial planner when it comes to predicting how the stock market's going to go and which stocks to buy. And highly educated financial advisors do not actually do much better than the S&P broad index funds when it comes to their long-term success. So in a nutshell, I think AI is going to have trouble predicting the stock market because people have trouble predicting the stock market. There is no great source of knowledge to synthesize in the first place. And you probably heard that past performance does not predict future performance, so feeding in all of the stock market data that we have into an AI might not help it in any way. Learning from random noise means the output is still random noise. Now, just to play devil's advocate, there is places where artificial intelligence will transform the financial industry and make people more money. For example, James Simmons and his fund, using incredible PhDs, high-end algorithms, has consistently beat the market. But a lot of that is finding arbitrage opportunities and other highly sophisticated financial modeling and being sort of the first to invent the idea and being the first to the market. So maybe there is a place for AI to continue kind of down that path, helping some people find new ways to kind of manipulate the market or find little holes in it, make more efficiencies, as they would say. But that'll be somewhat of a race to the bottom, and it'll be the first ones to the market that make the most money, and it won't be something that will be consistently predicting how a stock's gonna do. But is there a pattern to be found in the first place? Something that a superhuman AI could figure out once it understands sufficiently how the world's economy works, how people think, the ups and downs that actually contribute to a stock going up and down. But the question is, will an AI ever have a holistic view of people, the behavior patterns that actually lead to the stock trends, the maybe fundamental values or some other ethereal thing that I can't think of that actually does explain what's about to happen to a stock before it goes up or down? Can a future artificial intelligence ever accurately separate the signal from the noise? Maybe, I'm not ruling that out. I do think that pretty much everything humans do will be predictable by future AIs, but there's orders of magnitude to that kind of prediction, and I think we have several steps that have to happen. So when I see those, then I'm gonna start getting closer to that conclusion. But for now, still overhyped. So to get a better sense of where artificial intelligence is in terms of predicting stocks right now, we can turn to open source projects and the 24/7 crypto markets. So the beauty of this analysis is that cryptocurrency is actually traded from the blockchain, meaning that we can look at the transactions to see how it's moving around. And when you combine that with open source projects that are AI algorithmic trading bots that explain what the trades are doing, why they're doing it, and how it's implemented, we can start to get a sense of where the top line for AI trading bots is right now. And what can they do right now? Well, AI is great at analyzing huge sets of data, huge volumes of news and text. And they can do it much faster than any human, and they can reply with sort of a sentiment, a signal, or some kind of summary of what they've read. So there's definitely trends and patterns, especially ones that are written in human language that can be analyzed faster than ever before. And that kind of information can potentially enhance the accuracy of traditional prediction systems, and even humans who want to just use their gut instinct but want a little bit of a reference to make them feel comfortable making those decisions. And of course, AI can find efficiencies in systems that actually are behind the scenes making this order, so how order books are structured, how people can place orders, how clients are actually able to turn their decisions into actions. Basically stuff that's normally red tape. It usually costs firms extra money, or it's people who are in the middle of something trying to help but also slowing things down. Now on the flip side, the downside to some of these AI trading bots is that they're heavily dependent on the quality of data that's fed to them in the first place. And the quality of data that regular people can get their hands on is always of less quality than the major firms who control this stuff. So Bloomberg, people who have huge order books like Robinhood and Fidelity and TD Ameritrade, they all have some data source that's superior to the average person. But still, even for those companies and for regular people like us, there's incomplete information about the market as a whole. So there's never quite the exact data that you need to make the prediction, since the market is the market. It's the whole market summarized together. And of course, inaccurate or incomplete data leads to unpredictable returns. Also, the more complete your data gets, the more you're vulnerable a lot of times to black swan events. The more you think you have an overfitted signal that's going to give you exactly what you want because it's learned so much from exactly the data it gave to you, the more you can get blindsided by a variable that just comes from left field. So an unexpected or drastic market movement that's not accounted for anywhere in the near-term data just can throw the whole system into haywire. And even for the systems that are successful, they're usually so sufficiently complicated that there's no real human or trader that understands the true mechanism at any point and why it's doing what it's doing. Meaning that they can't assess for themselves, or especially for a client, the actual risk that the money is taking on. They can't really troubleshoot or suggest different strategies when they're sort of at the whim of a black box, some sort of big neural network that's learned a lot that makes a prediction, but nobody can really go in there and explain why it's doing what it's doing. So let's break down some of the models that are meant for finance. I don't know if you've heard of FinGPT before, but this is an open sourced LLM that's meant for finance. And for me, one of the weird things about how these AI systems are overhyped is that these are LLMs. These GPTs stand for generative pre-trained transformer systems. This is transformers and language, the same thing that's powering Gemini and ChatGPT. And of course, there's nothing wrong with these algorithms. They are absolutely changing the world, but they're very different from traditional sequence-based time series data that you think of when you're trying to predict a stock. And even with something like Google's new Gemini model, which is truly multimodal, it's not a language model that then goes and requests images and things like that. It was trained from the ground up with vision, audio, and text built into its system. And even though I found some projects that do work on sequential data, that's not what any of the major systems that are really cutting edge have been built on. So if you recently saw my video on forecasting, I covered Life to Vec and Time GPT, which are both projects trained primarily on sequential data, but they're not being deployed at scale. They're not incredibly huge projects like the likes of the major tech companies are putting down. So even if they're built with an architecture that would be superior for building something that could predict stock markets, if it's not being built at scale by one of the major financial firms, I just don't see it actually making an impact. Now, AI being used by stock markets for things like fraud detection or to help pause or slow down trades when things get out of whack might actually stabilize an overall market in some ways. But on the flip side, big companies like Bloomberg, which do have access to incredible data, have publicly shown that they're building their own large language models at scale at a speed which is as fast as possible with huge budgets and huge tech talent. In fact, Bloomberg has developed a large language model that's based on Bloom, which is an open source model specifically tailored for financial applications. But even Bloomberg GPT is specializing in a lot of the news information that they have, and it's more of a language model at the end of the day. It's still tokens. So the kind of financial news, which is things like company filings, social media discussions, and even market trends, I just don't know if even solving that problem, understanding the sentiment is going to be the right thing and the right variable to actually make a decision about a stock market with high accuracy over the long run. And even temporal sensitivity that drops off, meaning something that was in the news over an hour ago might have already had the majority of systems on the internet that are doing automated trading make their decisions. So it's really not going to affect the next 2 minutes of the stock or anything that you might want to predict. And it's in response to these kind of challenges that the authors of this new project called FinGPT were trying to address. So this AI model thinks of things a bit like an onion in terms of layers. So at some of the lower levels, there's the data engineering level, meaning here's some financial data, and then an AI essentially inside the other AIs is trained to try to clean that up, to try to understand it, to try to find gaps in the data. After it's cleaned up, it goes to an engineering layer, which actually looks at the data and says, like, what's the point of this? What can we build with it? What can we predict from it? What category should it go into? And then from there, we have tags that are essentially tokens or word phrases that you would normally get in something like ChatGPT, so you can use a traditional large language model. And then even one more layer is the application layer, the layer that makes decisions, the one that's connected to APIs, the ones that can go out there and do financial trading for people. Now, FinGPT was actually fine-tuned on financial data using something called a LoRa. This stands for low rank adaptation, and the only place I've ever heard of LoRa's being used before is in some of the image generation models where you would take somebody's style and apply it to a base model, but I guess they're somehow using the same system for this financial model. That's a little bit above me, but it also talks in the paper about how they deployed reinforcement learning, which is a classic way for, ChatGPT to be trained to get better and better over time. Except in this case, it wasn't on human feedback. It was the mismatch between the predicted stock market price and the actual stock market price, which was the feedback that was reinforced. Now, the good thing about FinGPT, it's open source, so it's a nice step forward to the democratization of finance. I would like to see a world where robo-advising, basically systems that are as smart as ChatGPT but open for everyone, help people make these financial decisions. Plus, I believe if we move towards open source models, it's just better if finance promotes transparency, trust, the kind of innovation that we always wanted from markets that had free information. This is exactly why it's illegal to do insider trading. When you trade on information everyone else doesn't, the market is not fair anymore. The market doesn't work. It's not market efficient at all. And finally, one of the most powerful tools that we've ever had for keeping track of a digital asset that is not able to be multiplied indefinitely is the blockchain. So this is definitely part of the future. And when you combine blockchain and artificial intelligence, you get to a world where we have some really interesting options. Now, if you go far enough into the future, obviously there's some risk that artificial intelligence will do so good of a job with so many things that currently employ people that we are going to have mass unemployment. We're going to try to find different ways to keep people fairly compensated, and some of those options might look something like universal basic income. And with AI's soon superhuman ability to write code, some of the weaknesses of blockchain are never in the core blockchain model. They're usually in the systems that are built on top of it with weaknesses in that layer. So in the future, we could potentially have the best of both worlds. Superhuman coding, meaning that we can audit and check the systems to make sure that they're secure, and blockchain's decentralized control over a market that is freely available, where the information is out there for anybody to synthesize. And in fact, AI might be so ubiquitous that everybody can use their own AIs to synthesize that information, meaning that people who are unable to spend all day looking at screens the way a lot of people who are professionally employed in the financial industry today are, can actually use these tools to synthesize and summarize things just as quickly as the professionals. Also, inside of these blocks of data that hold together blockchains, we don't have to just have the information about who owns what part of the money. You can also have all sorts of other information, including assets, and for what is financially traded in the blockchain, you also have the benefit of an immutable audit trail. And these are all unique characteristics that, when we see utilized by artificial intelligence, could result in all sorts of new applications, including improved scalability, security, efficiency, and market dynamics. Also, I like the idea of the stock market going back to maybe potentially being more value-based thanks to artificial intelligence. I mean, the stock market originally was completely dictated by how well a company's earnings were, the products they were making, how their sales were going. But over time, it seems like we've abstracted so many more layers about it. It's become more like gambling. It's become more social sentiment. It's become more political in the way that the stock market moves up and down. Future artificial intelligence might not be as biased to the human emotions as we are. It might not be politically motivated. It could get down and dirty and actually understand these corporate documents. It could understand the market, it could understand the sales of widgets, and it could make a better assessment of what companies are actually providing value to the world and which ones aren't. Using blockchain and AI to actually program these blockchains, there could be all sorts of new systems also that can help compensate people. For example, there's already certain music platforms that automatically give some of the money from a purchase back to the original artist. But now there's the potential to take different companies, different projects, divide divide them up into DAOs, which are decentralized autonomous organizations. Let AI write all of this code, actually rewarding the people who put their initial investments in, building products that actually the world uses, and then sharing that profit back correctly, all without all of the middlemen taking all of the fees. And maybe we can build agents that work on our behalf, basically digital avatars that are powered by artificial intelligence that think the way we do, that have the goal of helping us build wealth, but they can be out on the internet doing this 24/7. And maybe it won't be something that only big companies have, but can be more democratized around the world. Imagine an avatar that works 24/7 for you like a financial advisor trying to earn you passive income. Trade cryptocurrencies, stocks, invest in the long term, think about international options for you, save legal costs, and even guide you towards better savings and spending to maximize what you spend your money on in the first place. So even though we might be pretty overhyped right now, looking ahead, the super long future of where blockchain, artificial intelligence that can write code that fits on that blockchain, where cryptocurrencies can start to create these 24-hour markets, where artificial intelligence can maybe move past human sentiment or understand human sentiment at a superhuman level, where countless agents are out there on the internet acting on the behalf of the people who deployed them. It's going to change the way world economies work. In the sense that maybe 10, 20, 30 years from now, what we actually think of as money, of value, of open markets, of transparency might look nothing like it does today. But if that day comes and YouTube still exists in any form that it does now, you're gonna wanna be subscribed to this channel, so smash that subscribe button. Thanks for listening to me rant about how the market's overhyped, and I hope you guys have a great day. Thanks for watching.